I'd like to introduce Gino Blefari. Gino Blefari is the Chief Executive Officer for HSF Affiliates, which operates the real estate brokerage network for Berkshire Hathaway Home Services, Prudential Real Estate, and Real Living Real Estate, Warren Buffett's real estate franchise business. Blefari has an award-winning agent, manager, and broker owner. He came to his position at HFS Affiliates from Silicon Valley, CA-based Intero Real Estate Services, Inc., which he founded in 2002, and through mid-2014 served as its president and CEO. Under Blefari's direction, Intero became one of the fastest organically growing companies in the history of real estate. In 2014, Intero ranked 7th nationwide for real estate sales volume, according to Real Trends. Some of his recognition includes ranked among top 25 most powerful and influential leaders in the residential real estate industry, according to the 2016 Swanee Poll Power 200 rankings. 2007 Italian Businessman of the Year by Italian American Heritage Foundation. And last but not least, he was my real estate professor at De Anza Community College. So let's give Gino a warm welcome to Google.
Thanks. Thank you.
So for the first question, I was going to start off with, can you talk about the different real estate investments you've made? And
My personal investment?
yeah, your personal investments.
Sure.
And what has been one of your best?
Okay. You know, I'm not a huge real estate investor, but being in the real estate business, I remember when I started in there, I had heard from some trainer that it would be great to try to buy one house every year. And so the first probably 7 years of my career, that's what I did. I bought a house, and I had a rule then. The rule there was I wanted to be able to drive to it within 1 hour. So that was my simple rule there. In turn, traded those 7 houses into a building, and what has turned out as my best real estate investments over time have been commercial buildings. And I'll give you a case in point. If you look at the Intero building on Santa Cruz Avenue there, that was some of my little rental houses that I rolled into that. I actually built that building there, and it turned out to be, a great return. And a funny story of how investments, sometimes you think they're good, and then you think they're terrible, and then they turn out to be good, or back and forth. In 2005, I bought a piece of dirt on El Camino Real right here in Menlo Park. It was an old gas station, and it had already been cleaned up, and it was I was going to build a building. And at the time, 2005, as you remember, the real estate market was really good. So Intero was doing terrific. I thought, okay, I'm going to build this building, and then I'll open up a real estate office in Menlo Park. So I had hassles with the city, and hassles with the city, and we didn't finish the building until 2008. Well, 2008 was right in the brink of this recession that we have, right? And so it was a terrible time. So there was no way I could put an Intero in there. So I had this building that I had debt on it, and I'm not some multi-millionaire investor at that time at all. And so I had debt on it that was cost me about $48,000 a month, and it was vacant. It's not a very good investment, right? I think everybody in the room would agree. But I was lucky enough to get Stanford Medical to lease it. So I had Stanford Medical in it, and Pendleton in a little 2,500 square feet, and they leased it for like maybe $55,000 a month. So I had a tiny bit of a cash flow, but I never pulled one penny out of it. And I think about a year ago right now, because rates were so low, I refinanced the building, and they appraised it when you refinance, and they appraised it for $10 million, and which was fine. I think I owed about $5 million on it, but I'm going to keep it. I haven't taken a penny out of it. No, zero return. Just whatever appreciation you might have. And I got a call from the commercial broker that leased it. Guy from Cornish and Carey Commercial. And he says, "Hey, you want to sell your building in Menlo Park?" No, I just refinanced it. It's just a long-term hold. Almost broke me. But he goes, "Well, I got a stupid offer for you." I go, "Really?" I go, "How much?" He goes, "Well, $13,100,000." Oh, well, go ahead and send me a letter of LOI. So he sent me a letter of LOI, and I called. I had one of the Intero agents, commercial agent. leased the downstairs 2,500 square feet. And I had them lease that. And so I called them up and said, hey, I'm going to need a copy of the contract because, you know, I might be selling the building. He says, oh, well, what's going on? So I told him what was going on. That Monday, following Monday, I got an offer on the building that was worth $10 million for $15 million all cash with like a 30-day close, right? So what turned out to be, you know, one of those, Travis, a crazy, like, oh my gosh, how did I get into this? Now, I'm always the majority owner in the buildings, and I dragged a bunch of my friends in with, you know, little pieces of the whole thing, and so it turned out to be a good deal. But, you know, that might be one of the more successful, it definitely is the most successful, you know, deal that I did there. Also, when we're speaking about real estate investments, you know, coming out of that investment, then I had, you know, several $1 million that I needed to roll over into other properties. And with my new job as the CEO of HSF Affiliates, and we operate Berkshire Hathaway Home Services, that brand in Prudential and Real Living, I'm constantly on the road and visiting affiliates, you know, franchisees. And so I'm in Chattanooga, Tennessee, and, you know, well, you got any good, you know, any good deals out here? We're always looking for good deals, right? It's funny thing, in Chattanooga, Tennessee, I was able to buy 5 single-family homes, okay, for like $110,000 each, and they rent it for $1,300. You know, you don't find those kind of deals like right here.
Right.
So, you know, most of the investments in real estate, you know, for now seem to be good. But look at that Menlo Park one. In 2008, it was terrible.
Right. Now, when you made a decision to buy in Tennessee, like, what metrics were you looking at to determine if it was a good investment?
I was just looking for a good return, not any specific number, but okay, I can buy it for this price, and here's how much cash flow.
Right.
I'm kind of all about cash flow now.
Exactly.
You
Yeah.
know.
They have a rule of thumb called the 1%
Yeah,
rule.
right.
So by you bringing in $1,300 a month, buy it for $100,000. I mean, that exceeds 1%. So
Yeah,
it's like you
it
did
was
pretty well.
pretty hard to do almost
Yeah.
anywhere else.
Gotcha.
I bought, you know, I'm kind of spread it out a little bit. Before, my rule was it's got to be 1 hour away.
Mm-hmm.
Now my rule is it's got to cash flow. I'm lucky enough, though, to know real estate professionals. Like, you know, Travis is here in the audience right over here, Travis Conti. So I know people like Travis all over the country, and so it's not me trying to guess, is this good? Because a lot of times you can guess, but you don't have all the details that you really need to know about it. And so I'm lucky enough to have that all around. So I'm, you know, I got places. I got a place in Austin, Texas, because I know Austin was a pretty good market. Believe it or not, I got a Starbucks in Oklahoma, and if you Googled it, I can't even remember the city it's in, but if you Googled it, it's where there's more tornadoes than anywhere, right? But it, you know, the return was very, very good, and I've got insurance.
Gotcha.
Yeah.
What do you think separates a good investor from a great investor in real estate?
Luck. Right? You know, I mean, look at, don't, you know, it's just like with any type of, you know, with any type of investing, it's someone with a good strategy and the strategy that fits for them.
Right.
Okay? Luck does play a bit of it, though. Perfect example, my parents were from Massachusetts. I grew up in Sunnyvale, working class family. They happened to buy a house in Sunnyvale in 1960 for $18,750. Now, we were from Massachusetts, where they had a house that was about $20,000, worth about $20,000. I went back when I was visiting, when I toured through Massachusetts, I wanted to go to my mom and dad's house, right? Well, their house is still worth $20,000 in Massachusetts. Their house here, in an area of birdland right by where the new Apple's coming in, is probably worth, you know, at least $1.5 million, maybe $1.8 million, right? So, you know, there is some from an appreciation standpoint, some of it is.
Right. A lot of us here at Google are thinking about investing out of state, and so we have to use our networks and try to determine what would be a good partner for us to work with, how to find a good property manager, how to find a good agent. What are things that you look for in a quality investor-oriented real estate agent?
someone that understands the real estate investment, and lots of realtors they just sell houses, okay, and but you may not need that commercial agent, which is more of like if you're buying a building and things like that, but you want someone that understands the numbers, understands the return. Just someone like that. I'm usually I can do it myself now. It's like, okay, what can get a place for? What can it rent for?
Mm-hmm.
And then I'm going to do the math myself. But you want to have somebody. I'm lucky enough to have someone that I'm going to know and trust that's going to say, oh, it's not right next to the dumps like 2 miles away and the wind blows right by it.
Right. Exactly. One issue that we deal with here in the Bay Area is because the cost of housing is so high that it's really hard to find good real estate investments here. For us, for Googlers just starting out who don't have a lot of capital, are there certain areas that you would suggest that we take a look at for real estate investing?
Again, I would say it's all kind of like personal to you. I had that rule that 1 hour. I wanted to get one within 1 hour. So a couple of the first things I bought was down in Morgan Hill. I bought a place down I remember like in 1987, I bought a brand new house that Dividend was building in Morgan Hill because I could drive to it in an hour, and it was certainly easier to afford,
Right. Yeah.
Right now, you have this crazy opportunity, and I know lots of the Google people are millennials, or you're young, but you got the crazy opportunity of interest rates being really, really historically low, okay? And so if I didn't have a house right now, I'd buy one, okay? I wouldn't try to wait for, is the market going to change? Actually, the market's actually right here in Silicon Valley, even though there's almost no inventory, it's actually slowed a bit right now. It's starting to slow a bit right now. But let me tell you the reason why, and you almost never will hear this from anyone. In fact, I think a student one time at Deanne's asked this question, and I went back and I did the math on it. I says, oh my gosh, I wonder why no one's ever heard of this. But let's just pretend interest rates are 4%, okay? Interest rates are 4%. And let's just pretend that interest rates move to 6%. Now, in the old days, in 1989, I paid 4 points to get 10 and an eighth, right? Which is that just perspective for you. But everything else was coming down from like 14 and 13 and right on down there. But here's an interesting piece. When you make your payment on a 30-year fixed rate loan amortized over 30 years at 4%, 30% of that payment goes toward paying down your principal of your loan, reducing your principal. When it moves to 6%, only 17% goes. So if you do the math, you almost have a 13 to 14%. It's almost like appreciation, because appreciation's gaining equity, right? When you pay off your mortgage, you're gaining equity. And that's why, and rates are even lower than, I used 4 and 6 just because it was kind of easy, but it's even better.
Gotcha.
If you're gonna buy property, especially your own house, man, that interest rate is a huge factor, and it's totally in our favor because it's as low as we've ever seen them. And I don't know what they will do, but my guess is they will go up.
Yeah, fair. Now, regarding international markets, are there any international markets that you have seen that look like potential good areas for real estate investing?
Yeah, international is kind of a little bit more risky. Certain markets like I think Beijing and Vietnam might be a good market in Vietnam, but you can't buy as an American, right? So I would go to the ones that traditionally have been pretty good markets, right? Like Mexico, okay, Canada. Here's the other thing too, though. You can get to Cabo San Lucas in, how long would it take to fly there? Dietra, how long? Do you know how long it would take? 2.5 hours, right? And you're buying something over in Europe, it's what, 10.5 hours? So, I would look to some of those areas like that.
What are your thoughts on the general housing market outside of the United States? People are always asking me, do you think we're in a bubble right now? Is there more legs for this in this economy to keep on going? What are your
Right.
thoughts?
Yeah, I know that question is just one of
Yeah.
those things. Before I answer that, I'll tell you a quick little story. In 2004, because Silicon Valley was going really well, I was on Kudlow and Kramer, the CNBC, right?
Yeah.
And the whole big thing was, is it a bubble? Is the bubble going to burst, or it's a soft landing, right? And, I had really no idea. But everybody at that time, except a few guys that had figured it out, thought we were going to be in for a short, soft landing. So I would say, well, before I say, how many of you think that we're in a bubble? So maybe a third of you, okay? And then the 2/3 say that we're not in a bubble. If I had to guess, and it'd only be a guess, I would say we're not in a bubble, and here's why I back that up. When we had the bubble in 2000, I guess the bubble burst in about 2007. Okay, I say bubbles burst. There was a thing called a negatively amortized adjustable rate subprime mortgage. Okay. And what that was a mortgage that when you start out a very, very low rate, and that's what your rate was. Negatively amortization means payment's supposed to be up here, but I'm only making the payment down here. And what I'm going to do with the payment that you were supposed to make up here, that difference, I'm going to add that onto the back end of your mortgage. Now, that only works if property is totally appreciating. Okay? The next piece to that was back then, and now we don't have those loans are pretty much gone. There's government regulations that they can't do that type of a loan. The other thing, there was loans where you wouldn't verify anything. We almost called them liar loans, as a joke. It's a liar loan because there was no verification of anything that was put down on the loan application. So all sorts of people got loans that they never should have gotten, and that doesn't happen. So the only way of those people that got all those loans could even survive was with the market accelerating at a crazy space. And if my balloon payment came in, it was okay because I just refinanced out of it and got another adjustable rate mortgage. Okay, those days are gone. We don't have those specific days now anymore because of that. So to that, I would say maybe we don't have a big bubble where it's going to burst like it did in 2007. How many of you saw the movie The Big Short? Almost all of you, yeah. That was a pretty darn good movie. How many of you read the book? It was Michael Lewis's book, The Big Short, okay? And it really talked about, the negatively amortized adjustable rate subprime mortgage, and it also talked about in the book, it's like, I think he was talking to the lady in the club, right? And she owned he goes, well, how about your condo? How you doing? Well, I own 6 houses, right? I mean, people just owned and owned and owned because anybody could get a loan. And we don't have that anymore. It's a lot harder.
Yeah.
So I'd say, government regulations have played a role in that,
Yeah, so today I saw the GDP numbers came out, and it showed that they're a little soft. A question I'm getting from Googlers also is, do you think this interest rate environment will hold for the next year, 2 years, or do you think we're going to eventually see some increases?
I think we're going to eventually see some increases. I have no idea how long it will.
Yeah.
Everybody was forecasting it would go up, and then something in the economy will happen, and it'll go down. I think what you need to understand about interest rates, when the Fed raises interest rates, usually the market has already anticipated that raise. So it's not like it's going to have some giant jump overnight.
Okay, gotcha. So as real estate investors, we depend upon our agents to get access to MLS and get real estate information. What are some other sources of information that we could find that wouldn't require us to have MLS access?
Well, real estate's local, number one, right? So every market's different. And of course, I come from the real estate industry, so I would say you've got to find somebody that understands that market and knows what's going on. There was a time a while, not so much now, but in Silicon Valley and other markets, when the market was so hot, okay, half the properties were being sold off market. So you wouldn't have had access to it unless you were part of some sort of a, some sort of a network.
Gotcha.
There's also like at BHHS, we have an app that you can put on your phone. It's if you text to BHHS and you put in 87778 exclamation mark, you get a free app that wherever you are, you can find out what's going on in the market. You'll see what's for sale, what's sold, all sorts of things right there on the free. So there's also, and Berkshire Hathaway isn't the only one with that app, but there's all sorts of ways to, that's a way to almost get access to all of the MLS,
Okay.
Yourself.
Right. In case of a deflationary environment, how can we position real estate assets, and what signals do you guys look into to check if there's a deflationary risk?
Well, first one you look is for deflationary. That it's if prices are going down, right? If now all of a sudden homes are selling for less than they are, so that would be the first sign. Decline in wages, decline in unemployment, commodity prices. You could look at all of those things, but I'm mainly going to focus on, wow, prices seem to be coming down. I think the Fed expects about, or they would like about 2% inflation.
Mm-hmm. Yeah. The Wikipedia entry for Home Services America, the parent of Berkshire Hathaway Home Services, says that HSA also provides mortgage loan originations, title and closing services, home warranties, property and casualty insurance. Can you explain how all those entities work together?
Yeah. Most big companies like Berkshire Hathaway Home Services, Home Services of America is the largest or the second largest real estate company in the country. They have things like my brand, Berkshire Hathaway Home Services, Prudential Real Living, but they also have about 26 companies. Like when you see an Intero sign now, you'll see it say Intero, a Berkshire Hathaway affiliate. Okay, so they're a big company, and the consumer on every survey going back to 1995 has always said they want a one-stop shop. So what we try to do as a real estate company is provide mortgage, title, homeowners insurance, even personal insurance. I mean, it's a whole gamut of the whole thing. I think you were referring to RESPA. Everybody's familiar with RESPA, the Real Estate Procedures Act, and that's where no one can receive anything of value, okay, on directing a settlement service. However, when you're a big company and you own the whole thing, and a manager is an employee, the manager could be incentivized to increase the capture rate on mortgage. A realtor now is an independent contractor. They could not receive anything of value for directing business to a settlement service company. I will tell you this. The companies, and many big companies have them, the ones that do, you're better off almost 100% of the time using a company that has all those services, because those providers are held to a higher standard. Even by the regulators, you get a 0% for a mortgage. You'd have a $0 on that closing statement. It can be off zero if it's the own company. If it's an outside company, it can be off as much as 10% and still fall under the regulation. So the other thing too is there's a whole reputation piece. It's all based on service. You've got to give great service in order to get the business, whether you're the title, whether you're the mortgage provider, whether you're the insurance provider, and things like that. But when it's all right in the same family, it's scrutinized a lot closer.
Gotcha. Can you share your views on the title insurance market? The New York Times has some unfavorable words regarding it, and they think it's kind of the field is an oligopoly.
Yeah. Title, I always like, kind of almost smile when it comes to title insurance. But let me just explain what title insurance is. Title insurance is a one-time, most insurance you pay every year, right? You renew your insurance every year. Title insurance is a one-time where they're assuring that the title is exactly what you thought it was when you bought the house. In other words, who sold me the house was actually the owner. What liens are on the house that may go with it, are going to stay there, but what liens have to be cleared off, do that. The title insurance paid out something like last year $670 million in title claims where they had pretty much got it wrong. But where the New York Times, I think where they were going in that article, where they almost say it's kind of like a scam, is because here's the deal. They're going to search through that title as carefully as could be, and if they find anything wrong with it, they're not going to insure it. Your deal's not going to close until they get that fixed. So it's like everything's perfect. It's like, I'm going to put title insurance on this car. I'm going to put insurance on this car, but I'm going to make sure it's in perfect condition, and then now you can't drive it. It's just it just is like it's a one-time fee, so that's where it gets that reputation. But they do make mistakes, and they do pay out. Now, in the old days, before title insurance, you had an attorney do it. Okay? Now, if the attorney had no assets, you could never even recover. It was like too bad.
Interesting.
Yeah.
It seems like there's a secular trend where people are now moving towards going to urban environments, and the suburbs don't have the same, I guess, allure they used once to have. Do you think this is going to continue on forward, or are we going to revert back to that suburban trend?
Well, I think we will revert back, but to that point, did you ever see that? There's that commercial, that television commercial. Well, I'm never going to do this, and then he's doing that. I'm never going to get a van, right? And then the guy's getting a van, and I'm never going to move to the suburbs, and then he has kids and he moves to the suburbs and things like that. I think with the millennial generation being so big, okay, and people do. Millennial, they want to walk to everywhere they go. If you look at the building in San Jose, all those high rises, right downtown, Santana Row. You go to San Diego, you go all over. There definitely is that. I have, two daughters, 20, 23, and 25. Where do they want to live? San Francisco. So they can just walk to work and do that. So there is that. The other thing you need to remember about the millennial is the average age of millennial is 25, so that's kind of young. The average first-time home buyer is 31. Okay, and we've done all sorts of studies on the millennials and what they want and what they're looking for and things like that. And I think back to when I bought my first house. What was important to me is the same thing that's important to them. Just even being able to ease a purchase was one, but the other one was to be able to tell everybody, hey, I got a house. I got my first house. Right, Travis, you're 25, right? And you're going to be buying a house this year. And one of those things will be, hey, I got my house. It's that little bit of that pride that you have. But definitely there has been, and you just got to watch the construction, all of the stuff that's built. My headquarters now is in Irvine, California. And even though I still live in Los Altos and I try to be at home as much as I can, so we're going to be down in Irvine. I thought, well, maybe I should buy something down there. And that's exactly what I bought. A condo, urban living, and you know what? It was I timed it. It was 2.5 minutes from my condo to the front door of my building, And so, yeah. And I'm not a millennial, but right. It is common, and they're building more and more and more of them.
Now, as far as the average size of a home, we're noticing that the average square footage that peaked around 1950s, 1960s has slowly decreased to smaller and smaller home sizes, and now we're seeing a lot of talk about the tiny homes. Do you think that trend is going to continue, or do you think home sizes will revert back to a larger size?
Well, I actually think they've gotten larger over time.
Yeah.
Okay, I think they've gotten larger over time, and that's just because the part of it is that move-up buyer is getting a bigger home. Part of it is when the luxury market, watch when a developer builds a house. Okay, they're pretty much bigger. If you go to Sunnyvale or Cupertino or Mountain View, wherever there were homes, and a developer had come in the last even 20 years, you'll see those newer homes are bigger. Okay, and so I think it will continue as people, every once in a while you'll get somebody moving out of their big house into they're retiring, and then it's going down. But for the most part, the homes being built now continue to be more square footage. And in our area, it could be just because the land's worth so much money, too, and they want to maximize the amount of house that you can get on there.
Excellent. So At this point, we're going to go to audience questions and Dory questions. So if anyone has a live question, I'm going to grab the mic and pass it over. Does anyone have a live question? Excellent. Can you hand that to him, please? Thanks.
Travis is here too. If you had a local real estate question, we have a. I haven't sold a house since 1997. Go ahead.
For a first-time home buyer,
Yeah.
do you think it's overly aggressive to try and get, let's say, a multifamily home where you'd be paying more, but you could find a renter? If you wanted to look at your property not just as a place to live, but as an investment.
Yeah, I think that's great. If you could, you got to convince your partner, your significant other, your spouse that that's what you want to do because this is where you're going to live. But yeah, I think it's great because then you're going to have that rental income. You're going to have your own house. You're going to be able to watch it. It's right next door if it's a duplex or a triplex or a fourplex. Okay. Great advantages when you become on the investor side because that part that you do rent, you can depreciate the improvement on it. You can write off all the expenses that you have on that side. So no, that would be that'd be a great thing. In fact, I was just talking and I didn't even know it. Travis Conti right here, real estate agent in Redwood City. We were talking. He's 25. He's going to buy his first place, and that's what you wanted to do, right, Travis?
Exactly.
Same thing.
Yeah, under 4 units is still residential, right? So you're looking basically the same type of loan in most respects, and you could afford to live there and they'll count that as part of your income. So your DTI too can change. It all depends on the lender who you use, but it's honestly a great option for,
It's a very good option.
Yeah.
That'd be great. Maybe even some of the improvements you're able to do it yourself right there to it.
Is there a metric that you use as far as like what kind of rental income versus how much you put into the house? Like you were talking before about like return on investment. Is there like a return on investment kind of metric you use for that? Like let's say I think I can get this much rental income per month, and that's a certain percentage of the total that I'm putting down.
Yeah, and then again, and Travis, you can comment on this if you'd like to. But then again, it's going to be all all personal to you, and also here location is going to play a huge difference on how that's going to play out. A duplex in Gilroy can be a lot different than a duplex in Cupertino or Mountain View or Palo Alto, right?
Any other live questions?
For a brand new, starting out like you are, you might just want to do the math and let's say, okay, our payment's this amount, and if we rent it for this amount, and we can afford this. It almost becomes like, what can you afford? I remember when I bought my first house, I was a realtor, and I said, and my wife was a nurse, and we bought a house, 26 Del Monte in Los Altos back in 1985 for like $200,000, and I figured out what my payment was, and then we actually got a roommate in one of the rooms, and with what my wife made and what that rent came in, we could make it, right? And so that was my little criteria. It wasn't anything fancy, and when it's little, it's got to be almost customized to you. Yes, sir.
I had a question about commercial property. It seems like one of the trends that's happening now is retail is sort of under siege, if you will, from online services. A lot of competition from Amazon and other places, so people are mail ordering things. And I'm wondering how you see that affecting the commercial marketplace, or maybe it's not a problem.
I think it. I don't have a good call on that, but let me just tell you, it's certainly affecting it, and I think that's why we're seeing more and more. Have you noticed? You got retail, and then you got units above it. It's like a mixed use. And that probably gets a little bit of a safer routine. I'm building 16 units right now. If you go down Winchester on Winchester and Campbell, right? Just after you get past Campbell Avenue, you go down. You'll see it going up there. But it was the same thing. It was and it was kind of like a personal thing where you do the math. Okay, and I'm going to have 16 units here that I can rent, and then you're going to have some retail like underneath. But it certainly has had its impact on a lot of things.
Any other audience questions? You guys are quiet. Wow. You know, what I enjoyed about your class was that not only did you talk about real estate investing, you also talked about other businesses you invested in. Can you share any stories about companies you've invested in?
Did you recall? Do you have something that you recall from class?
There was a story where you had I think it was your father-in-law who was a dentist.
Oh, got it.
And
Yeah. That really wasn't an investment, but it's basically, again, kind of understanding business. My father-in-law was a dentist, retired dentist, but he had a stroke, and so he was in the hospital and couldn't be a dentist, and so we were just trying to figure out, and a check bounced, So what was going on there? Well, what had happened was the dental practice wasn't doing super well because he hadn't raised prices in a long time, and he hadn't done the high margin items. And I told this in my real estate class when we were talking about business opportunities and on selling business opportunities, because as a realtor you can sell a dental practice, you can sell this. And someone had asked, have you ever sold like a dental practice? And I said, yeah. But here's what I did. I went in to the secretary there, and I said, what are your high margin items? What makes you the most money? And she goes, oh, root canals and the different, more surgery types of things. I says, really? I go, do we have any of them that we need to do? She goes, oh yeah, we have a lot of them we need to do because several years ago we got sued by one customer, which is normal, and so we just stopped doing them. So I went up to Sacramento and found a dentist, a guy, 28-year-old, just out of dental school, and paid him $500 a day, and had the admin book every root canal and whatever else she told me were the high margin ones. And I can remember made a pre-tax profit of $60,000 a month for 3 months, and then sold the practice. And if any of you are over there in Sunnyvale, Mike Maher, the Foothill Medical Center, that's who I sold it to right there. But that was probably, was that what you're referring to?
Yeah, that was an amazing story.
Yeah. I just looked for high margin, just a business thing, right?
Right.
What do you make the most off of?
Yeah.
Well, doing this, okay. Do you need to do them?
Right.
Yeah, okay. Put them in, and that's what you do.
Gotcha.
Yeah.
One thing here at Google is we have a lot of people who are extremely busy with their careers, and so we get solicited by turnkey investment houses telling us we should go invest in Memphis or in Ohio. Do you have any advice for us on how we can go about making sure that if we're going to get into a deal with these companies that we know we're dealing with reputable people? Do whatever research you can online to do research, but I would just say be careful. Okay? Just always be careful. Every time the deal looks too good to be true, it almost always is too good to be true. So I would just be careful, and my advice to you would be, get that duplex. Get that duplex with your 4% loan, and put some of your own sweat equity or whatever you in. Then eventually, maybe buy a house, and then you still have the duplex and things like that. So I would just say, be careful, because there are a ton of scams out there. Gotcha. Now, in investing in real estate, one issue I deal with is I really like the Sacramento area because I had family up there. It's within maybe 2 hours driving distance, depending how fast I drive. But I want to continue buying investments in there, but at the same time, I feel that I'm not diversifying myself. Do you ever worry about, like, if you're investing too much in a certain area, or is there a way to kind of hedge that?
Well, there certainly is a way to hedge that, but I don't really, personally, I don't worry about that. Sacramento's working for you. We got one guy at Intero, Howard Bloom, some of you may have heard of him, and he just invested in Texas, okay? And that's been his plan year after year after year. Sacramento market kind of fouls our Silicon Valley market. If we're real good here, anybody moving there, it seems like such a great deal. We have a tendency to drive their prices up.
Yes.
Yeah,
I was working with a person in HR who went to go buy a house in Sacramento, and the person was surprised how cheap things were. And I was telling her, though, everything's relative, but going to your effect that looking at a house here for $1.3 million and then going to Sacramento and be able to get 6 houses. with that amount of money,
Exactly,
it
exactly.
changes everything.
Yeah, Chattanooga, Tennessee. You
Right,
know, it's
exactly.
like,
Yeah.
I'll take all 13 of them, you know, and it's like there's less than a house in Los Altos, right?
Right. No, that definitely is true.
Mm-hmm.
Let me see if I can. Oh, there's the question right there. Chip, can you pass the mic, please? Thank you.
We talked about residential and commercial real estate investments. I'm curious, and I guess it kind of plays into residential, but for vacation rental properties, you know, with Airbnb and a lot of that, you know, actual work shifting to the homeowner instead of an agency. Do you see that as? I was curious to get your thoughts on
Okay, yeah, I'll give you my thought on Airbnb. So here's what I did. I went and bought that townhouse in Irvine. I mean, you probably shouldn't have me up here giving you advice on how to invest. I was at a conference, okay, with Deetra, my admin, right over there. We were at a conference. And I was moving to this new office in Irvine. And I didn't know where it was. So we decided on the break, the 15-minute break, to drive over to the office. Okay, so we went out, got a cab from the little, you know, we're staying at the Fairmont there, right there in Irvine, and went to the office. That's cool. And as he was driving out, saw new condos being built. So I said, hey, wait a minute, pull in there. Okay, pulled in there, talked to the guy in there. I said, what do you have? I go, you got any 2 bedrooms? He goes, yeah, we got one. We got one left in this phase right here. I go, okay, where is it? And he goes, it's there. I go, okay, I'll take that one. You know, he's like, you kidding me, right? Bought the thing in 15 minutes. What was the name of the builder? Lore or something like that? Or forget the name of the builder, but they said it was their fastest sale ever, right? So I buy the thing. Now I'm in there, and I got my house, and I put my little stuff in it, and I find out, wait a minute, this new job, I'm on the road every day. I'm down in Irvine 2 or 3 days per month, you know? So now I'm having lunch with one of the Berkshire Hathaway agents, you know, there in Irvine. And we're talking about, I was coaching her on how to do more business, a relatively new agent. And she goes, so when will you be back? This is December. Okay, it's December 12th of a year ago, last year, December 12th. When will you be back, Gino? I go, well, let me check my calendar. I won't be back here till February. I'll be here on the 10th of February. Okay, great. See, so what do you do with your house when you're gone? And it just sits there, right? You know, you ever thought about Airbnb? I go, no. And I did try to rent it one time, okay? And I could rent it for I want to rent it for $3,600 a month. I could rent it for $33, but they wanted me to take all my stuff out of there, and it's just such a hassle, and so I didn't want to do it. She goes, well, I do Airbnb for my mom. I go, really? And she goes, yeah. She goes, I'd do it for you. So I go, okay, right? So I just pulled my clothes because I had just sets of clothes out there. I just drove down, pulled my clothes out there. January, I got a check for $5,900. Okay, this month of July, I'll make $8,400 on my Airbnb. Okay, so I'm a big proponent of that's pretty darn cool. I mean, I would like to. I wanted to. I guess you can't totally do Airbnb at Santana Row. They may have some rules where you got to have a 30-day tenant. But I wanted to go out and buy another place just to do Airbnb. So
she
that's
manages all of those.
She does.
for you.
She does, and she so she manages the people coming in. You know, the cleaning lady. Place is better than it ever has been, and she gets a chance to meet new clients potentially as they come in. She does it all. I pay her a fee to do that, which is a small fee. Here, I think vacation rentals right on the mainland United States probably okay because you can get people to manage them for you, okay, at a reasonable amount. Vacation rentals or short-term rentals are good wherever there's water, wherever there's skiing, wherever those types of golf, those types of activities. But I was just over in Hawaii, family vacation, we're still in July, so for the 12th through the 14th, I'm in Hawaii, our traditional family vacation. I hook up with the Berkshire Hathaway, you know, the Travis of Berkshire Hathaway over there, I hook up with them, and we go out and we looked at some vacation rentals because I thought it might be kind of cool. Well, here was the thing. The vacation rental, the property management, and this is what you'll get when you go international, the same thing. The property management, they want 50%. Okay? Now, I could go outside to my own Berkshire Hathaway because they have their own management service, and they want 27%. Okay? On a couple of places where I do have property managers, like in Chattanooga, Tennessee, and even here in Santa Clara, it's just like 10%. So that makes it palatable. But you get that little thing there. That Airbnb though is very, very cool, very cool.
Now, you mentioned the commercial investment that you were talking about, the area of dirt, and how eventually you got rented out from Stanford
Medical leased
Medical.
it. Yes.
You said you had partners. How did you go about structuring that partnership?
Structured the partners in that particular one as an LLC.
Okay.
Okay. For that's how we were advised. The only thing is you got to be careful. You got to get a tax guy and things like that, because you may need to turn it into a partnership, like a tenant in common, in order to exchange out of it.
Right.
Okay, so there's just be careful with that. But I started in an LLC because was planning on never selling it. Turned it into a tenant in common, I think, when we had that so we could sell it. The Santa Cruz Avenue, 518 Santa Cruz Avenue, the Intero there, that's still in an LLC where I'm like the manager, as the main guy, as the manager of it, and then you have other people in.
Gotcha.
The nice thing about commercial, if you get commercial, the nice thing about commercial is that typically the tenant pays the insurance, the tenant pays for all the maintenance, most of whatever's laid out there in that triple net lease, and that's where it makes it so nice. The heater goes out, it's like, heater went out, your apartment building. I have 8 units in downtown San Jose, and the interesting thing there is every week the sink was clogged up. Okay, so I just changed the lease. Sink clogs, tenant's responsibility. You know what? The sink never clogged up anymore. So there's just simple things that you can do.
It's magical how that happens. It's
yeah, it's magic.
Yeah, one of my mentors, they were one of the part of founding families of Santa Clara, and his mother actually owned so much land in Santa Clara that she bequeathed the city of Santa Clara so they could build their city council chambers on the land. And one part of their land, they rented it out to Yoshinoya Beef Bowl. They developed the land, and then they paid rent about $15,000 per month and took care of everything. It was just a sweetheart deal. I think we have one more question, though. I think it was in the back. Oh, so is anyone else? All right, well, thank you so much, Gino, for coming through.
You're
This was
welcome.
an absolute pleasure. Okay, it was
Oh,
you.
it was him.
Think of, I had a question. So just now you mentioned you had the class about real estate. So can you talk about a little bit more about the class? Do you have any plan to give the same class in the future?
Oh yeah, when I was part of Intero and part of Coldwell Banker, and my company before that was Contempo Realty. When I was here, I taught a real estate class at the community college. That's how we met. I taught real estate principles, things like. See, he only remembered the stories. He didn't remember there's 640 acres in one section of a township, or these crazy things that you have to do to get your real estate license, right? But it's kind of cute. You remember that. But no, I don't do that anymore. That was at the community college.
Right. And Gino is part of the reason why I'm here at Google, because he had this time management sheet on how to become a better real estate agent. And it was just completely applicable to any career or any fashion. And so when I was a TVC here at Google, every morning in the bus, I would read his sheet to the point where I didn't have a digital copy, so it was eventually just falling apart on me where I couldn't read it anymore because all the times I'd take it in and out of my backpack. But it was an absolutely amazing class.
I actually even remember you calling now. It's starting to ring a bell when you called because it disintegrated.
Yeah.
All it was 63 points on time management that
Yeah.
I had done over 25 years of doing real estate. Simple things like, when the subject of the email changes, the subject line needs to change. That saves you some time right there, right? Then going back and forth. But scheduling yourself out a year in advance is a very cool thing to try to do. And you put everything in there that gives you balance first, your days off, your vacations, your date nights, things like that, and then you backfill. So we do that. I do that to this day. But yeah, that's what you're talking about.
Yeah. And then my favorite was proper preparation prevents poor performance.
Yeah.
So, yeah. Well, did you have one more question? Yeah. Can you use the mic so everyone can hear you? And that will be our last question. Yeah.
Do you have anywhere I can find that sheets? Because on the internet I found an article about your productivity tips.
Oh,
So
time management one?
Yeah.
Yeah. We can connect
I'll get a
you to
copy
it.
and then
Okay.
I'll send it out to you.
okay, that would
Alrighty.
be great.
Excellent.
Yeah, be happy to do that.
All right. Well,
Thank you.
Gino,
I also have
Yeah.
a blog that I do every Thursday
Oh.
Thoughts on Leadership, and be happy to add anybody to that blog. It's always got some sort of message, from where I went.
we got one subscriber right here. You can add
Yeah,
me.
okay.
So, Gino, thank you so much for making time for us.
You're
we really
welcome.
appreciate it. It was an excellent talk. So, can we give Gino a round of applause, please?
Okay. Thank you.